Welcome back to Balancing Acts. We're talking with Alana McNichol, a CPA and the Director of Tax Practices for Linda Hamilton CPA LLC, based in New York City, but working with customers across the country. Alana, we want to talk a little bit. There's so much buzz right now about the words beneficial ownership or the CTA or the Corporate Transparency Act. Can you walk us through why it's important for us to talk about that today? What is important about 2024?
Yeah, beneficial ownership reporting. It is a seemingly simple reporting requirement that we're finding out very quickly has layers of complexity. And unfortunately, that's sort of the name of the game with Congress deciding what they want to do and when they want to do it. And, it's up to us as professionals and you as business owners to figure out how to cross your T's and dot your I's. So conceptually, the beneficial ownership reporting is a report that tells the government for every entity out there who owns it or substantially controls it. And all you have to report on that is the name, the residential address, the date of birth, and a copy of a photo ID. So on its face, okay, not so bad. That being said, there is a lot of nuance on ownership, substantial control, who needs to be reported, when the report needs to be updated. Unfortunately, the list goes on and on.
So when we talk about control, and you might think, well, I own the company and that's it. I'm the only owner. But it's more than that, right? Sometimes there can be an employment agreement or there can be other things. So why don't you walk us through a little bit of what does that control mean and what positions might fall under that category that they should be aware of?
Yeah, so unfortunately, ownership is just kind of the tip of the iceberg about what you need to consider when you are considering reporting under the beneficial ownership requirements. We're talking about the C-suite, corporate officers, your general counsel, perhaps, other senior executives, and really important decision makers. Again, this is a very broad term. And it's not particularly well defined, which is why we are encouraging our clients to seek out counsel when they fill out this report. So substantial influence. Do you have decision-making capability about the business, the finances, the structure of this organization? For a lot of us, it's quite a simple answer, but it still requires some thought. You really need to just go beyond who owns this company on paper and think hard about who has that kind of influence within your business. And I think it's you report now on what's going on today, but you also have to report in the future if this changes. So, how often does the C-suite change? More frequently than you might think. So you've got to spend some time with this legislation.
So there's a couple of nuances. We're not attorneys. We're accountants are always working closely with attorneys to help their clients understand the requirements. One thing I want to make clear is this is a FinCEN form. It's not a tax form. So it isn't necessarily prepared by your accountants and shouldn't necessarily be prepared. If CPAs are listening to this and you're a small CPA firm, it has been ruled, I will say the New Jersey Committee on the Unauthorized Practice of Law ruled that no one should be preparing these forms except lawyers. And they carved out a tiny little exception for CPAs and enrolled agents. And they said, only if it's simple can your CPA help you. If it's complex, your CPA cannot. So, what might be an example of something complex? Alana, is that part of the reason we've decided together to say this is something that lawyers need to read through all your documents, your employment agreements, your operating agreement, your bylaws. Somebody has to read through all those documents to actually figure out whose name has to be listed on this form. What can you add about that on how you're maybe working with law firms in New York City?
Well, we've got an exclamation point around this entire issue because the penalties can be up to $600 a day for doing this incorrectly. Which, as a small business owner, that's a massive amount of money for what is just a form. There's no tax liability associated with this form. It is truly just a filing requirement. But that's the reality. And so we are talking to clients about the structure of their business. I mean, I think a lot of businesses are very simple, right? There's one owner. That's kind of the end of the line. But something that a client asked me recently is, well, I'm one business owner. I own the company, but I file a tax return with my spouse. They're reported on that tax return. Do I need to be thinking about them? Or, I have a management agreement with somebody in my LLC. I think I manage it and they don't, but what does that actually, how does that actually relate to what are in my documents, right? There's a distinction between how you are operating today and what are in your agreements. And that is what some of this is getting at, is that substantial control is actually quite subjective, which is, again, nobody likes to pay more in legal fees than they have to. But when we hear $600 a day penalty, we sometimes have no choice but to say, hey, you've got to talk to Cancel about this one.
And I think it's particularly helpful to maybe at least talk to the lawyer this year, get somebody to go through your documents. It's not even a bad time to update all your corporate records. Is your operating agreement clear, or is it something you looked at 15 years ago? Are your bylaws clear? Or again, did you, maybe use LegalZoom to create your company and nobody really looked over it? So this is a good time to maybe do some housekeeping. What happens if you dissolved your entity sometime in 2024? And this form is due when? It's due December 31st. And you might talk about the due dates a bit for new entities and former entities.
Yeah. So if you form a new entity, you have, I believe it is 60 days from the date that you form the entity to file this initial report. And I should also point out that not only do you have to include the beneficial ownership information on a new entity, you also have to include the name of who helped you form the entity. So if you worked with your accountant to form this entity, you may have to list them. And I want to also clarify that we're talking about personal information, right? You are supposed to be listing personal residential information for some of these filings. So it's something to think through perhaps before you form. But otherwise, all existing entities have to file this, yes, by December 31st of this year. And if you're in the process of winding down a business, you may still have to file this for an entity that is in the process of dissolving. Are you truly considered dissolved? Has the state rubber stamped that yet? Is the bank account gone? I mean, I think a lot of professionals out there are sort of giving it a when in doubt, file it kind of mindset, which I don't think is necessarily a bad one.
Yeah, I listened to a podcast the other day between several attorneys, and they had said that, the problem with dissolution is you aren't really dissolved on the date the state did. It follows state laws, and you might keep $2,000 in the bank account for any winding up expenses, but then there might not be anybody to sign. Again, these are these little nuances that can really kind of mess you up. And again, I think very helpful to speak to an attorney who can read the forms with you and make sure that you're doing what you need to do. You mentioned the penalty of $600 a day, which is quite significant. And the government often puts very large penalties on forms that are just informational. There's no tax liability. There's no cost to filing it. And that's why they do this, is to force compliance. So how does that $600 a day work when it comes to all of us? Maybe we formed our company 20 years ago. when do we have to file, and what kind of penalties would we have if we don't file it?
Yeah, I mean, it's the same basic concept, right? Whenever you formed, you still got to put something on record before the end of 2024. And the penalties are calculated in a couple of different ways. So I don't want to necessarily get granular on those calculations, but I think it's just more important for you to understand that there are, to your point, a ton of, right? This is a new, big, bad, scary one, but there are a lot of little compliance type forms out there that can bite you. And so I think, to your point about housekeeping, it's a great time for you to look at all of your documents. Are you in compliance with whatever the state wants you to do on an annual basis? There are a lot of things that I think seemingly have no consequence, but have those penalties attached to them.
Right. So we're going to take a break in a moment. I just want to summarize what you heard is Alana and I have decided in our firm that we want all of our clients to speak with an attorney, especially for this filing, because we want someone to be able to go over all their corporate documents, make sure they're in order, that the forms agree with what you think is the ownership structure and the operating agreement, and not to get in trouble. But we all have to file by December 31st. So you need to do this now. Let's not wait until December and, oh my goodness, I have to file this and I've got 3 days to file it and no one to help me. So take care of it now. Set up an appointment, meet with somebody in September, and get this taken care of. We're going to take a commercial break, and we're going to come back and talk to Alana more about how you can vet and work with an accountant or a bookkeeper.